While everyone's racing to buy AI stocks, some of the smartest money on the planet is doing the exact opposite. Michael Burry, the man who predicted the 2008 financial crisis, just placed $1 billion bet against the two biggest AI darlings on Wall Street. And he's not alone. Hedge funds have already banked $24 billion shorting AI-related software stocks in 2026 alone. So what do these billionaires see that you don't? And more importantly, how can you use their playbook to protect your money and even profit from what's coming? If you're new here, smash that subscribe button and turn on the bell so you never miss a daily AI update. Let's start with the biggest contrarian bet in the market right now. Michael Burry's hedge fund Scion Asset Management bought put options against 1 million shares of Nvidia and 5 million shares of Palantir. The notional value? Over $1 billion. That's not a casual hedge. That's a conviction play. His thesis is simple but devastating. He argues that hyperscalers like Microsoft, Google, and Amazon are artificially inflating their earnings by extending the useful life of their AI computing equipment. They're buying Nvidia chips on a 2 to 3 year product cycle, but depreciating them over 5 to 7 years. That makes their earnings look better than they actually are. And when reality catches up, the correction will be brutal. Here's the part that should make you pay attention. Burry's Palantir short is already up 35%. The stock dropped 35% from its peak since he entered the trade. He recently posted a technical chart on X showing a head and shoulders pattern that suggests Palantir could fall another 40 to 60% from current levels. Meanwhile, Oracle now has over 2% of its shares shorted, up from 1.5% a year ago. But Burry isn't the only billionaire raising red flags. Warren Buffett has called AI the next growth industry for scamming, comparing its destructive potential to nuclear weapons. Berkshire Hathaway has been sitting on a record cash pile of over $300 billion, largely avoiding the AI frenzy. And legendary investor Howard Marks wrote an entire memo questioning whether AI is a bust.
When Marks actually tested Claude, Anthropic's AI, it gave him such a compelling argument that he changed his mind on the technology itself. But here's the key insight. Even after being impressed by what AI can do, Marks still warns against going all in on AI stocks. His exact words, "The risk of significant losses is real." Drop a comment below. How are you using AI to make money right now? Now, here's where it gets really actionable. Hedge funds made $24 billion in early 2026 by shorting software stocks. The iShares Expanded Tech Software ETF dropped over 21% year to date, with the overall sector losing $1 trillion in market cap. The targets aren't the AI builders. They're the companies AI is replacing. Think traditional automation software, document management, and basic SaaS tools. Intuit, DocuSign, Salesforce, Adobe, and ServiceNow all dropped more than 20%. The play is straightforward. AI is so good now that it's making entire categories of software obsolete. Hedge funds are betting that companies which can't adopt fast enough will keep bleeding value. So, how do you use this information? Here are 3 specific moves you can make today. First, audit your portfolio for vulnerable software stocks. If you hold companies whose primary product can be replicated by a ChatGPT plugin or an AI agent, that's a red flag. Second, consider inverse ETFs or put options on overvalued AI application stocks. You don't need to be Michael Burry to buy a small protective position. Services like Robinhood and Interactive Brokers make options accessible to retail investors. Third, and this is the contrarian play within the contrarian play, look for the AI companies trading at reasonable valuations that the panic selling has created a discount on. When fear is this high, quality gets thrown out with the garbage. Here's your daily life hack. Use AI itself to monitor these short positions. Set up a free Google alert for SEC 13F filings from Scion Asset Management, Bridgewater Associates, and other major hedge funds. When their quarterly filings drop, you'll see exactly what the smart money is buying and selling before most retail investors even hear about it. That's how you stay one step ahead. If this helped you, hit that like button, subscribe, and turn on all notifications. We drop AI Alpha every single day. See you tomorrow.